Hello, welcome back. So, GameStop is actually trending right now. Yesterday it was up 30%. And if you take a look at the stock news, you will see a lot of articles talking about this. So, I selected one. We can take a little bit of a closer look just to get an idea why the stock is up that much. And basically, the core reason is pretty much again the same story, a potential short squeeze. As you will see here, the shares that are sold right now short are 24% of the float. That's a very high value, and it's a potential for a short squeeze. And having a history of short squeeze, this is probably why people are actually flocking to buy this stock. Yet there is a big problem here. If you buy this one, you may end up holding the bag, or you may end up making quite some money. So what do you do? Now, the first thing that I wanted to talk about is the fact that this is a stock to trade. This is not a stock to buy and hold for the next 10 years or so. It may not even exist as a company in the next 10 years. It's not doing great financially. And we are going to examine what the company is doing, see whether there is actually any merit in potentially holding this one for a little bit of a longer period of time, which I generally speaking wouldn't recommend, but I will let you know exactly why. Now, today on the pre-market is down 3%. It makes a lot of sense after such a move here. But you will see that the company's P ratio is negative because it's losing money and it's also losing free cash flow. And take a look at these key metrics here. They are absolutely horrible. This is basically speaking a meme stock right now. It's a stock that people are using it as a trading vehicle. It's not really a company that you should be buying, as I mentioned earlier. Although the float is down, the outstanding shares are down from what they used to be. And the problem is with this one that its financials are really bad here. And you can take a little bit of a closer look at the income statement, for example, and see that the company's revenue have been going down tremendously pretty much every year. It's only the last year that they did a little bit better. But overall, it's been going down. And take a look at the net income going into the negative pretty much and continuing in negative territory. If you take a look at the balance sheet, you will see here that it is also going down in terms of its total equity, 2.2 billion to 1.6 billion, problematic as well. And if we also take a look at the cash flow statement, negative net income lately, and that produces negative operating cash flow. And at the very end, pretty much negative free cash flow, minus 496 million right now. And you will notice that the company has been getting some extra debt here from issuing common shares, common stock in last year, really. So that's another problematic thing because the company is not profitable. They will have to either keep issuing shares or getting debt or both. And so this is a horror story here for the current situation in GameStop. And even if we take a look at the stock evaluation tool here, you will see that the 5-year average revenue growth has been negative, minus 4%, minus 8% for the 3-year average. It's only last year that somehow they did better. And what can you do here? And also the net income margins are negative, as you'll see, on average. And the free cash flow margins are skewed. They are not normal here, again, because of negative net income. Now, what can you do? Suggest maybe that the company is going to continue in this trajectory. Let's just say that they managed to do 5, 10, and 15, just for the sake of the argument. They keep growing at this last year's rate. It's like maybe a new era for the company. Let's just think about that for a while. And then let's also say that somehow the company turns into profitability and they are marginally profitable, 1, 3, and 5% in terms of their net income margin. And the free cash flow margin, again, let's just say that they are achieving 80, 90, 100 here. Let's see what we're getting out of this. Of course, I'm using 13%. I could also use 15%. This is a much riskier proposition here. We'll try both. Let's calculate this first one. And you will see that our current price sitting at 115 bucks. It's way off pretty much everything here. Kind of a little bit closer to the high estimates. But remember that we also projected very aggressive stuff here. We were super confident. And this one is about 15% year revenue growth every year for the next 5 years. Net income margins of 5% is probably the worst thing of all. Because revenue growth maybe they can achieve, but net income margins, when they are actually that negative, I'm not sure how they will go from -6 to +5 in the next 5 years, like immediately. So this looks like a fairy tale, really. I don't see it happening. And so If somebody were to buy this one, this price is absolutely insane. It's a lot of money to be spending for GameStop stock right now. And if you're playing this one, you're basically playing it for a trade. And so you're basically following the trend, what is happening pretty much in the markets. And you kind of try to make money in the daily. So today maybe it's a down day really, and you may want to be playing this for a short potentially. This can change through the days. It can actually be, some days can be negative, some days can be positive. Again, this is a very, very shorted stock, very high amount of shorts really outstanding right now. So it could definitely produce a short squeeze, but this is a sign of a trade. It is not a sign of a long-term hold. And I have been asked about it in the channel actually from a viewer, whether this is an interesting opportunity to invest in and actually hold. And I would say no, this is not a good idea to be holding this company. It's not doing well financially. You're gonna have trouble recouping your money if this becomes a normal stock and it's not a meme stock as it is right now, where people are playing it for a squeeze. It's gonna be almost impossible to be making your money back because the company doesn't do anything in terms of its financials. It's basically, again, as I mentioned earlier, sort of like a horror story here, and I'm pretty sure it's gonna keep getting worse unless there's some sort of a insane shift in GameStop operations, which I frankly don't see happening, especially in this kind of environment. So I would avoid GameStop for sure. Maybe just play it for a trade, a daily trade that is, and that's it. That's how I would potentially work on this one, and yeah, definitely not hold for the long run. Thanks for watching the video. I hope you enjoyed. Please remember to like and subscribe. And if you are interested in the tool, you can find the links in the description box below this video, with which you can become a Patreon, support the channel, and also get unlimited access to this tool, in which you can use all your projections for all your stocks, all the stocks that you want to. And also remember to come join us at our Discord channel. We have a channel, again, the link is in the description box below. And we're chatting about all sorts of things in terms of the stock market pretty much daily. Very interesting discussions, and we'd love to have you there. Thanks for watching this one, and I'll see you in the next video. Bye bye.